Okay, so hello everyone, this is Jack, and today is 218.011, and I'm going to make a video for all markets, right? So let's start from the euro dollar. Okay, you can watch my screen here. Okay, we have our non-farm payroll last Friday, and it's a very good trade captured in the last week. So we also observe a 618 pullback plus a neckline here, right? And there's also inside bar breakdown. So that's the reason I want to short, all right? And our first target is the previous low, 1.1530. If you look here, last Friday, after the non-farm payroll, the euro falls very nicely and it gives us almost 100 pips, right? From 1.126 to 1.1620 to 1.1530, with a 90 pips gain for this trade. And let's look here now. What we have is, okay, you can see here the price has already pulled back to 88.6 retracement, right? And if you check this leg, this is a one leg up, okay? The second wave is a correction, and now this is our third wave. Right? We have this two leg up, and if we look at the Fibonacci extension, okay, we use this Fibonacci extension tools to measure what is her length, the second wave. Okay, you can see here it just hits nicely to the 1.272 extension. And look left, there's a rally base drop. This is a supply zone, and also that is a 86 retracement. Right, so it's very good to short euro here because we just need to pay this much as our risk. Okay, this is our risk, and our reward will be minimally at least 32%, and also 61.8%. So our reward will be here and here. Right. So you can see this is a very nice risk reward ratio. Okay, if we are wrong, we just lose by 25 pips. But if you are winning, okay, we can get more than 70 pips. Okay, and let's look at the 4-hour chart. So we can see that the euro has a very strong move since August 15th. Right, it moves about 430 pips. Okay, and the correction pulls back to 1.1530. So the recent strong support is 1.1530. Okay, it's here, and the recent very strong resistance still 1.1650. So I believe the euro will have another, sideways, and after that it may have may give us some information, is either break down or break up. But whenever this situation happens, we already have a plan to trade it. Either you want to trade the sell the pullback if the 1.1530 is broken, or you want to buy the pullback if 1.1650 is broken. Right? We have two scenarios, but right now because it's still inside the range, right? Inside the range, this is considered as a very good resistance. So we short, we see whether the price can pull back to 1.1565 again. All right, and look at the daily chart. The euro still in the consolidation of the long-term triangle. Right? Why did I say this is a triangle? Because you can see here, this is a strong move down, but it reversed a V-shaped reverse. So this tells you that this triangle is not broken yet, because it has a pullback inside the triangle again, right? So this kind of a triangle is very likely to be a trend continuation pattern, right? So it's a one way down and consolidation of the triangle, and maybe it will come another wave, right? But of course, there's always a second scenario, right? If it breaks the triangle up edge, you will find a pullback to buy it. Also, that's okay. Okay, so just watch the triangle of the euro dollar. You will know clearly what it will go. Okay, let's move on to gold. Okay, gold is also in a triangle. You can see here the recent move is going to have directions. All right. Okay, but be aware that 1220, this is a very strong supply zone here. We have a lot of consolidation in this zone, and the price has to break down. So the pullback cannot break a new high. So this is still considered as very strong resistance. Now the buyers is the buyers have losing the power because cannot hold the price above 1,200 level again. And now there's two doji here in the daily chart, and you can consider this as a inside bar as well. Okay, and if the inside bar breaks down, that would be very good place to short, or you can short the pullback, right, and aim for 1,175. Only here we have some kind of support at this place. Okay, if we go to 4-hour chart, after the non-farm payroll, we have a very nice selling. Okay, as you guys know that I have mentioned that the 1198, 1002, this is a very, very beautiful structural breakdown and pullback trade. If you short from 1002, okay, you win about $8, okay, or 90 pips. Right? This is a structural breakdown and pullback. Right? Now it's still consolidation. So you can still hold your short from 1002 and see whether it can break the long-term, this kind of a triangle, right? If you can break this part, it means more downside room will happen, right? Dollar yen, okay. Dollar yen is bullish. If we see here the 110.60, okay. I can mark this place because this is actually a neckline for the this double bottoms, right? The double bottom neckline becomes support, right? And also it is actually a 618 pullback, right? And what we have here, we have an inside bar, right? Inside bar breaks up, right? So if you don't understand what is a 618, what is a neckline structure, what is inside bar, you should be able to catch this bullish move. Okay, so dollar yen bullish, and which means the gold is bearish, right? So I want you guys to hold your dollar yen long from this 110.60, right? And look at here, it's going to break up, okay? Because the dollar yen has already broken this channel. The 608 pullback already happened. Okay, so another wave is coming, right? Another wave is coming. You can have a target to 112.50. Okay, this will be the target, right? So hold your longs to 112.60 if you have any dollar yen buy. Okay, for the Aussie has broken the new low, and we have a very nice short from this place, 0.7350, right? And you can see it's a very bearish move. And last Friday it's broke down again, and now the price is consolidation in this area of 0.71. But be aware that the weekly chart, the has already made the lower low of this 0.7160. So as long as all is below this line, right, we are still bearish. We're still bearish. Then all may test 0.69 or 68. Okay? So what you should do is just look for closely for the pullback of 0.7160 level, and you want to short any pullback. Okay, actually the pullback already happened. You can see here this week is actually a pullback, right? So right now you cannot short Aussie because it's already too low. So what you can do is you can wait for the price to come back again to this level and short again, right? So sometimes the market will give you a 2 or 3 times for re-entry, right? So short Aussie from 0.7150 and aim for lower lows and also 0.69. Okay, for GBP, okay, GBP is a little bit strong in these days because of the Europe, the Brexit issue, right? But however, GBP has already hitting the very strong resistance here with 1.39, 1.3090. Okay, so wait for here, and you may have a good place to short sterling at this place. Okay, why should we short here? Because again, you are risking very small money. Okay, just your stop loss is above 1.3190. Okay, wait for the price to come into the zone. Okay, forms a double top patterns. Okay, you have to wait for double top to happens. So typically it's here. Okay, go inside. Okay, make a double top, break the neckline, and you short. Okay, so the best place to short is here. It's here. Okay, so whenever you can see the price is still going up, but you want to short, but not yet come to the zone yet, so you can wait for the price to form a double top in a lower time frame, like 1 hour chart or 4 hour chart. Right? Do we have a double top here yet? No, so you have to wait. But you have to understand that from 1.31 level, as long as this level is not broken, you can always short because the downside room is much bigger than the upside room, right? Okay, let's look at the dollar Canada. Okay, Canada, we are bullish. Last time I said if this place still hold, okay, 1.29, this place still hold because there's a lot of pressure before. That is a seller zone. Okay, the seller was broken and the pullback becomes support and another major wave comes up, right? So, and the dollar Canadian has already finished the three pulse move. Okay, 1, 2, 3, and cannot break new low. So that's why it's very good to buy the USD CAD here, and very good is we have a inside bar here. Okay, inside bar breaks up. So when the price is above 1.2950, you should buy. Okay, and buy and hold. Now you have 300 pips move. Okay, another thing is now what you should be anticipating is you can actually consider this as a flag pattern, or you can consider this as a a trend continuation patterns, right? So as long as it's still within this small triangle or consolidation zone, you can always trade the next bullish move. Okay, trade the next bullish move when you feel that it's already leave away the correction flag or channel. Okay, uh, there will be more upside room because see looking to here 1.3394 at least, or another places here 1.36.42. Okay, so still have a lot of place to go, and that's hard. You want to buy the dollar Canadian, right? You want to buy the put, buy the breakup, right? Um, where to put your stop loss? I think you should be better put your stop loss below 1.3043. Okay, you're below this pin bar here, right? Because you have to wait for the price to come back a little bit. Maybe the best entry point is 1.39, 3090. Okay, so it's a very simple trading plan with the price to come back to here, and you want to buy and stop loss below 1.3039. Aim for 1.34 and 1.36. Right. So let's move to S&P. Okay, S&P is forming a head here, right? And you can see the price is below 2087.7 again, and now the price is consolidation, and we have a long-term trend line, so it is almost going to break out, right? So just pay attention to this S&P. Okay, if the price can break down the trend line, right, you have to find the pullback to short. Okay, and you have a very nice gain for this trade. Okay, and where it might pull back to, you can use the Fibonacci ratio, right? Measure the 618, use the trend line, use the structure, all right? I want you guys to focus on this structure. This structure is very good. Okay, 2889.7, right? Because it breaks down the neckline, pull back, you want to take a short, and you can aim to 2008 at least or more. You can aim for 2720. Right? So pay attention to the S&P. I believe there may be a very good trade for this one. Okay, last but not least, let's look at oil. Okay, the oil has been falling the last week after typically after the EIA actually dropped to 67 level, but this level is actually a 0.618 pullback. And look left, there are structure here. Okay, so this again is a very good trade for oil. You want to buy here and aim to 69.88. Right, so this is actually a very profitable patterns because it breaks the channel here. It breaks the channel here, breaks up one wave, one leg up, and you don't want to chase. Okay, so pull back and buy. Right, pull back and buy. Okay, so 67.09 is a very good place, and more. You can see here, there's another 618 in the smaller time frame, right? So because the 67 has a very strong support, so the price rallied to 68.50, and you see another 618 come back. So it's very good to buy from 67.47. Right? If you understand what a 618 means, right? So buy from here and aim to 70. I think 70 will be a good place to take your profit. Right? So another 200 pips move at least, or maybe it will have another strong move to test 71.37 or 73. Okay, that is if the price come to 73, that will be very profitable already. Okay, so you have 67 to 73. Wow, that is almost 600 pips. Okay, good. So I think probably I will end the videos here, right? Because I almost covered all the topics. Okay, I'm very sorry that I cannot hold this webinar live, all right, because I have been busy in China here, and every day I have a lot of things to do, and most of the time I'm not out at the office, so I don't have the desktop for me to hold a live webinar. So I put my recordings here, and I will upload to YouTube, right? And I hope you guys can trade well based on my opinions and my guidelines. So plan your trade and trade your plan, okay? And good luck, right? So see you next time. Bye bye.